I think the transparency, of course, is going to be great. The problem, Melissa, is in the billing system. I mean, when you start out with a huge payer like Medicare that basically says we're going to pay you 60%, 60 cents on the dollar because we're your biggest customer, then you set your prices, 40, 50% higher than that. Somebody has to pay that higher price. And so everybody paying some sort of percentage of a discount of this huge headline price in health care just doesn't work. And those who don't have insurance have to pay that highest price. They don't get any kind of a discount. So this really skews the entire system, and the accounting for a hospital is really skewed from the very beginning. Trying to understand a hospital's books as a board member is really, really difficult. But it complicates the system in a way that's unnecessary, and it really does need to be fixed. But these hospitals are not making big margins. Most of them aren't making money at all. It's the billing system and payer system that has to be fixed.
The stocks, though, Michael, are telling me that whatever is being proposed today, not going to have much of an impact at all.
Yeah. I think it takes them in many ways off the hot seat, because adding that clarity says, OK, this is what I am paying for drugs, and I think that they're going to probably keep their volumes, and it takes the focus off of them a little bit.
Ron, let's turn to the broader markets here. For the week, the markets they haven't even moved barely 1%. We did see a bigger move in the bond market. I'm wondering what you make of us sitting just comfortably at record highs. Volatility is extremely low at about 12 on the VIX. What do you make of it all?
More of the same. A lot of liquidity available from the Federal Reserve. They continue to intervene to hold down short-term interest rates. They're on hold for the foreseeable future. Most central banks, we were talking internally about this the other day, have cut rates all around the world 50 times so far this year. So there's ample liquidity to go into higher yielding securities, or certainly those that offer capital appreciation relative to bonds. And so it's more of the same, Melissa. Now, obviously, the trade headlines, when they're positive, move the market up a little bit. When they're negative, they move it down a little bit. So we're subject to those, headline whims, if you will, that come out of Washington on a daily basis. But again, high quality stuff's working well. We have seen some rotation, though. Small cap starting to outperform large cap, value starting to outperform growth, emerging starting to outperform developed. Ever since rates have bounced off the bottom, we've seen that happening. So it's been interesting and something to probably keep an eye on going forward.
Michael, where are you on that argument of value versus growth right now?
Tyler, I continue to think that there's a lot of opportunity still in those value stocks. I mean, if the idea is that you still want to hit them where they ain't, if you want to buy low and sell high, a lot of the names in those value names still represent pretty decent value, where a lot of the growth names don't. The problem is, I'd actually love Ron's opinion on this. We've seen this head fake sort of back to value a number of times over the past 3 years and 4 years, where you get this switch when the risk trade goes off and everybody kind of stays away from the FANG stocks for a while. You start buying the value. I'm wondering if you think it's real this time, Ron. But as an investor, it's more of those names with real balance sheets and solid earnings I want to own while the market's making new highs. I just don't want the risk.